I always thought the smartest people in the market always had a very strong opinion, either up, down, what stocks were going to do. And I almost always had an opinion, not to be braggadocious, but I was very bullish on the markets for, let's say, 2 years from March of 2020 until we pretty much started QT. And that was a great trade. I didn't trade it the entire time, but I was relatively bullish, mainly just because of more dollars circulating in the States. That is not through just QE, but mainly the stimulus packages, etc. And then I was exceptionally bearish because I thought most of the stimulus were going to be ended, a lot less government deficit spending. We were raising rates, even the QT doesn't do a ton. I thought that would still have a slight impact, and the market was just wildly overvalued. But right now, I have absolutely no opinion on the market, and I've been struggling with this for a week or two because I always thought that I had to have an opinion. But then I saw an interview that Grant Williams did on Wealthion with Adam Taggart, and he was basically saying, he was like, I am smart enough to know that I shouldn't be trading the market right now, because he doesn't have a strong view either way. And this is something where I've been stuck at for a long time, or at least for the past 2 weeks, where I don't have a strong view up or down. And I thought that I should have been doing something. I haven't been, just because I didn't know what to do. But when Grant was putting it, it seemed so sophisticated that he knew that he wasn't smart enough to figure out where we were going, and he just wanted to preserve what he already had. He's happy with the gains that he's locked in, and he doesn't want to play the game right now until he has a strong view when something's going to happen or what's going to happen. He doesn't want to play it, and he's still actively searching for that. But this is one of the hardest things for people in the markets to do, to sit and do nothing. I mean, it is so incredibly difficult. It is almost like mind-bearingly, because when you're looking at your portfolio every day, it's so hard not to make these micro decisions. But if I do not have an incredibly strong view, I will not do anything, at least for the foreseeable future.
Understood. Yeah, no, I will also note too that when you look at my market involvement is very, very limited, but we've been going to cash for quite some time in terms of real estate, although that's a much longer cycle than it is, being a equities trader. But a lot of people, Rickers is the one that comes to my mind first and foremost, but undoubtedly others are recommending a substantially larger allocation to cash. And then once you figure out, what's going to happen or whatever, right, you then can enter back in, or, if there's suddenly a massive sale that goes on, you're in a position to buy.
Yeah, absolutely. I do usually trade the short side. That's what I've been doing for the past few months, and it has worked out fantastically. And in fact, I'm still incredibly bearish, but I see a lot of people positioned bearish. I see a lot of leverage being taken off the market, and I think the pain trade is still to the upside, and I don't want to trade to the upside. It's just, I am so fundamentally bearish on everything going on. Until I see a direct reason why I should be shorting the market, I don't want to do anything, especially when the pain trade, I think, is still to the upside. So if I think the stock market could potentially go up, but I don't want to play it, what am I going to do? I just want to sit down and do nothing. There are some individual stock picks that I have going, really just one with a shipping company, and really just because there's, I think, a lot of asymmetry involved. But besides that, this is by far the largest cash position, and I plan on keeping it that way for at least the next few weeks, few months, until something drastic changes in my mind or in the markets.
Sounds good.
Are you doing anything else, Justin?
No, I've been playing GME and SPX on that front. I feel like with the time spent with GME, I've got a pretty good idea of like where it's going to go, and so I'm a little bit more strategic with what it is. But probably about to do some covered calls. I did pretty well with puts earlier this week, and I need to reposition myself. Probably I'll do that starting tomorrow.
What about for SPX?
SPX are generally like straddles, and what I have learned is that even with GME, it's very hard for me to figure out one way or the other in terms of which way I think the market's going to go. But if you're buying, let's say, when DT SPX calls, and assuming you've got the bankroll to do it or whatever, right? You don't necessarily need a lot of volatility to produce, some outsized gains. But like you kind of really need to be like, this isn't like a set it and forget it play. Like you need to be pretty much there, focused on this in real time.
So what are you doing during market hours? Pretty much just on Pi-Fi stream, watching the markets?
Oh, yeah. So, I mean, if you're trading the market, you're not watching Pi-Fi, for God's sakes, close this immediately and go subscribe to him. The second thing that I'll do is, I'll have, my whatever fidelities who I like to use. I use a few others, but then I'll have like a game or whatever running in the background. And so like I'll switch over to my game that I'm playing for. I mean, Josh, you've seen me do this shit before. Like, it's like do 2 minutes of game, switch back to the markets, switch back to the game, back to the market. I mean,
Yeah. All right. So just to wrap it up, make sure you guys don't feel the need to always have to do something or have a strong view. I always thought that I had to have a strong view of what was going to happen with macro inflation or deflation. And I've had such a strong view since I pretty much got in. I was a big time inflationist, then a disinflationist. But right now, when I look at the monetary supply, looking at what's going on with bank lending, it's increasing. M2 money supply is decreasing. Where's the missing money going? A lot of it is due to non-bank entities buying treasuries, aka taking dollars off the bank's balance sheet and onto the treasuries. That is reducing M2 money supply. But at the same time, we still see deficit spending going up with bank lending. So there's so many cross currents right now to where I have absolutely no view on inflation. I don't know what's going to happen either way. And without knowing that, I don't know what's going to happen to the market, nor like I ever have. I've just at least been able to forecast it, or at least I had an opinion on what my forecast was going to be. Right now, I can't even develop an opinion for the short term. For the longer term, I still have some suspicions.
Yeah. And lastly, don't forget too, that even if you're sitting in cash, of course, inflation is a concern, but then again, if you're earning 3 or 4% right now on the cash, that helps ameliorate the sting that you might see from inflation. It helps split the carrying cost of cash.
Yeah, and look at bonds right now. It's super attractive. If I just wanted to sit, you can get right on a 1-year treasury, you can get a 5% yield. That is incredibly attractive. And I've even seen some very intelligent people saying that when the short end or when the yield curve is so inverted like it is now, that actually causes the recession, because these businesses that instead of reinvesting their cash into growing their business, if they can see that they can get a 5% yield on a 1-year treasury, that is more attractive than taking the risk in expanding their business. So if businesses are now risk off because they see some structural issues in the economy, just short-term yields are so high relative to what they can get in the open market, it makes sense for them to just lock in that 5% yield instead of expanding their business. And that, if that is what actually causes a recession, or at least what I've seen some experts say, that would be very interesting to say the least.